So stand by for just 1 minute.
And Rosie and Stephanie are connecting now, so I think we're
Great.
good.
Great.
All right, we are live. So Matthew, why don't you take it away?
Perfect. Are we good to start?
We
Yes.
are. Thank you.
Perfect. Just wanted to circle back with you all. We've completed our field work on the 2019 financial statement audit and single audit of Elbert County. And much like we've done in the past, we've always taken the chance to meet with you all as commissioners to walk through our findings. Obviously, the financials are still in draft form because if there's questions or edits that need to be made, we can make it. But virtually, this is what we expect to issue as the final version. So if there's things that you want some additional clarification on or some additional sort of information on, please feel free to stop me and provide some additional commentary on how everything's working. But I'll walk through the financial statements first, and then we'll go through the results of the single audit. Does that work for everybody? Okay. So it's my understanding everybody had been given the draft of the financial statements sent out last week. And so that's the financial statements look very similar to prior years, except for a couple things I'm going to point out to you all as highlights of some different things for this year. So just like in the past, your management discussion and analysis, and I'm going to share my screen so you guys can see what I'm seeing, if that's okay with you. Are you seeing a draft financial statement?
You sure are.
Okay, perfect. So the management discussion analysis is just like it sounds. It's management's discussion and analysis of the operations of the county for the year. And so your management team put that together, and it basically is a good snapshot of what happened at the county for the year. And it's, if you want to understand at a 10,000 foot level what the operations of the county looking for the 2019 year, it's a great place to set the table for how things happen. After that, after your management discussion analysis, we have our government-wide financial statements, and those are full accrual financial statements. And so it shows all of the assets held by the county, as well as the liabilities the county owes, and as well as your net position, which is basically your difference between your assets and your liabilities. And if we look at what happened over the year, our net position increased by $2.1 million. And that's as a result of the operations that's shown on this statement of activities. So the county collects taxes, collects fees, does all the different functions that a county does. And what that resulted in is an overall increase in net position of $2.1 million. And so that's a strong place to be. Obviously, a lot of entities may not be looking at an increase in net position for the 2020 year end, but for 2019, that's where we're at right now. So I won't spend a ton of time at the government-wide level because I think most of us spend most of our time in the fund level. And so the next couple pages are your fund financial statements. And so we're very accustomed to setting up budgets for each fund and operating a fund more or less like it's its own business operation within the county that's responsible for doing a specific function of the county. So much like in the past, we've had our general, we've had our road and bridge, we've had our human services and our sales and use tax. And then in the back, we have a bunch of non-major governmental funds. And so I'll walk you through the results of operations for each of the funds. So if we look at the general fund, the fund balance of the general fund increased by $540,000. The road and bridge fund increased by $678,000. Human services increased by $103,000. And sales and use tax increased by $607,000. And what that is that's basically difference between the taxes and the expenditures of each fund. And so each fund has some expenditures typically they're set up to do, whether it be providing public safety, whether it be purchasing capital assets on behalf of the county, or providing human services services to the county residents. And so that's important to point out because obviously, if you're running at a deficit, it would be difficult at some point to continue to run the county. And so at this point, the county is not running a deficit and had a strong operational year for 2019. These two schedules on page 26 and 29 help us get from the fund financial statements to the government-wide accounting. And there's a slightly different basis of accounting between the government-wide and the fund, as we may have remembered from prior years. At the fund level, we don't show the capital assets, nor do we show the outstanding debt balances. And so that's primarily the most major adjustments to get you from governmental fund up to government-wide balances. Okay, so this is where you're going to see a little bit of a change from prior years. So we implemented a couple different Gatsby standards this year. The one that we're going to talk the most about is Gatsby 84, which has to do with fiduciary activities. And because the county operates in a fiduciary manner, we have to present some additional information with regard to fiduciary funds. And so your management team went through the operations of the county and did some analysis. And what they came up with was kind of 3 buckets of fiduciary activities the county is engaged in. The first one has to do with property tax fund. And so it's just like it sounds. It's the money the county is collecting on behalf of other governments within the county that you eventually do just pass out to those fire districts, other cities and or towns, school districts, and so on. And so really you see the property tax and specific ownership taxes coming in, and those get sent out to all of those different organizations, typically by the 10th of the month throughout the year. And so that's why you don't really see a large balance sitting in there, with the exception of the property taxes receivable and the unavailable property taxes for the 2019 levy that will be collected in 2020. Also, we have the custodial treasurer's fund. It's just like it sounds. It's functions that the treasurer is operating in a custodial sort of function. Much like the property tax, it's not the county's money per se, and so that money is typically going out to someone outside of the county operations, and that's why we have to show it in a fiduciary activity. And then in the other custodial funds, we have a mixture of various things. I believe there's some inmate money in there. I think there's the CSU extension and a couple other small things where the county is charged with helping hold the money and pass it out to various organizations, and that's why it's accounted for in a fiduciary fund as well. Any questions with regard to kind of fiduciary activities the county is carrying out? This is something that used to be in a agency fund, and it was much less detailed, and so it's really just kind of blowing it up and giving you a better detailed picture on that. Perfect. So the footnotes are much like they've been in the past, are there to provide some additional commentary on how assets are valued, how liabilities are recognized, how revenue is recognized, how expenses are recognized. It also gives some additional commentary on what changes might have happened during the year. So it talks a little bit about us implementing Gatsby 84. It gives you some additional information on the cash and investment holdings of the county. Let's see. Yeah, it gives you some detailed information on the capital asset holdings of the county. Where did we start at the beginning of the year? What kind of purchases did we make during the year? What sort of projects that we place in service during the year and start depreciating? And as you remember in the past, depreciation is how we charge the use of those assets back through operations over time, so that we can understand kind of what the replacement value would be in the future for those assets when it comes time to replace them. Your long-term obligations, this shows the long-term obligations of the county. And so it's important to see that the county has some general obligation debt as well as some capital lease obligations. There was a slight tweak to some of the disclosures that happened with regard to debt, and that's bringing us into compliance with Gatsby 88. And so that's just making sure that there's disclosures on when we've negotiated debt directly with a bank or other financial institution rather than going out to basically the public markets. A lot of times with those type of debts, there's some additional requirements and or covenant clauses that we would want to disclose. And so those were added to the financial statements this year to make sure that people understand the full financial obligations of the county, and that both 84 and 88 would have been required for this year. However, because of the pandemic, Gatsby issued Gatsby 95. And so 95 really would have, what it did is effectively deferred the effective date. So in some instances, the county is a little bit ahead on financial reporting because your team had already gone through a lot of the gyrations and work to get both 83 84 and 88 implemented. And so many other entities were not able to get these implemented this year and are going to defer those to future periods. So that's important to point out as well. There's some more additional information on the long-term obligations, how your net investment in capital assets is calculated, a little bit of disclosure on the defined contribution pension plans the county operates or participates in, some additional information about your commitments and contingencies into the future as far as what the county has committed to in the future. Most of it relates to leases that are signed into the future for the next several years. Long term, some of these lease disclosures and commitment disclosures will change. One of the standards that would have been effective for the 2020 year end that will not be effective for 2020 is Gatsby 87, which is leases. And so that is one of the ones that Gatsby 95 deferred out into the future. And so your management team is on top of it, and they understand a plan for getting that implemented as well. Let's see. There's the accounting pronouncements on note 14, gives you some greater detail on all that. Subsequent events. We did add a subsequent event in note 15 related to signing a new capital lease, as well as a kind of a general update on the coronavirus pandemic and some of the potential implications for governments that the pandemic might have. We're not 100% sure what's going to happen, because really it really depends on what happens with the fall, if there's a second phase of the pandemic and an additional uptick. But we did disclose that there was some budget adjustments and some budget analysis that was done on the part of both the county management and you as county commissioners to address what you were seeing as far as Q1 and Q2 of 2020, and kind of just giving the reader some context on what could happen and what are some of the potential implications of the pandemic. One thing I should point out as well, as a result of the CARES Act, the county is slated to receive some additional money in the tune of $2.293 million. That money is going to be, it has to be agreed upon how to split that with the county and the local governments within the county. And so that will be shared with county proper and then county other entities within the county in order to address pandemic impacts to the county. Your management team has already talked to us about how they would like some additional ideas on how to make sure that these funds are expended in compliance with the federal regulations, because much like the other federal money we received, there is the additional compliance requirements and controls that need to go with that. And your management team has been on top of it from the beginning to engage not only us as their external auditors, but your consulting team that comes in and helps you all as well, to make sure that you all are set up to work through this money in an orderly and in compliance with the federal regulations. And so we do anticipate, based on the funding level, that this program likely would be audited next year, just as a looking at the federal spending of the county historically and looking at this in comparison to the other federal spending, it would likely be audited, just as to point that out. And you all will not be the only organization that's in this sort of situation. Virtually every governmental entity within the state of Colorado and within the United States is going to have to work through this, and it's going to be a we'll call it work through it, because it's a very much a fluid situation at this point. Much like in the past, I guess let's stop before I get to the budget to actuals. Any questions on the overall financial statements, the footnotes, kind of just some general commentary on how the operations of the county worked for this year, as well as some high level thoughts on the pandemic? Perfect. Okay, well, just like in the past, we have our budget to actuals here in the back. And so the budget to actuals are there to help us understand whether we outperformed or underperformed our budget. And so here's your general fund budget to actual. And so as you can see, revenues, we outperformed. So we collected a little bit more revenue than we thought we were going to. We spent a little bit less money than we had planned on, so that overall we had a $500,000 positive budget variance for the general fund, which is important because you don't want to spend more than you anticipated. You want to stay within your budgetary controls. And just like with the general fund, there's additional disclosures for the road and bridge, the human services, the sales and use. And I'm sure you all regularly interact with these budget to actuals because it's honestly how most governments interact and manage operations on a daily, weekly, and monthly basis, is looking at the budget and adjusting the budget based on what's going on. And as we talked about just a little bit ago, you've already looked at your 2020 budget and made necessary adjustments to try and address the impacts of the pandemic. Back here is your non-major governmental funds. So we have some combining schedules that show how we take our special revenue funds and debt service funds, as well as some detailed balance sheets for all those funds. So we have our law enforcement assistance, our growth and development fund, and we have various other funds that we virtually all the same funds that we've had in the past. And I won't go into detail on those, but we had no new funds in the back. The big new thing was the fiduciary activities for this year. And just like with the general fund, we have budget to actuals for all of those as well. So let's see if there's anything else I want to touch on. I think that's it for this part of it. I want to update you on the single audit, but I want to see if there's any questions on the financial statement side of it so far. Okay, well, we are intending to issue an unmodified opinion where we left it in draft form because we were just wrapping some stuff up and we wanted to make sure we interacted with you all and walked through any of the questions you might have before we wrap this up. But we're slated to deliver formally to you all in July, and whether that's in person or virtually, we'll see where we're at as a community in July, and we'll reassess that as we get closer. But as far as the single audit, we did audit 2 programs this year, and we did have one finding this year with regard to one of the programs, and it was a repeat finding from prior years. When we work on Title 4E, we as a county pay money to providers, and part of that paying that money to providers is the compliance supplement, and the grant agreement requires that we apply some controls to how that payment process works. There were some controls, and the controls were in operation, but we're making a recommendation that the controls that are being applied be applied to a specific part of the process. And it was part of the corrective action plan last year. And it's really just closing the loop on the control to make sure the likelihood of a person receiving a payment that they're not authorized to or not entitled to under the program, that it would not happen. And we didn't know any instances of people receiving payments they should have, but the whole reason we design and have controls put in place as a organization is to prevent that from happening. And so we're going to make a recommendation that the control be enhanced, and one part of the specific process does occur. It needs to occur in order to really strengthen that control and really lower the likelihood that an unauthorized or ineligible payment ever be sent out to a participant in that program. And management's already provided their management commentary on it and corrective action plan, and I do feel confident that they'll work through that. I just wanted to see if you had any questions on that. And that will be a significant deficiency as far as level. We've talked through levels in the past as far as material weaknesses and significant deficiencies. And because you all had some controls and you did show improvement, we had decided to go with a significant deficiency level. Any questions on a single audit finding?
Yeah, just well, I mean, I know that's our department that gets the most federal funds, so they're always looked at. Do you see this in other counties? Kind of I mean, it is disappointing to see a repeat of the same issue almost annually. Is this something you see everywhere, or is this?
Those programs are not the easiest programs to administer. I think if they can close this loop on this, I think it will likely go away. There's numerous things you have to do to comply, and they did implement a large part of it. They just didn't close the loop all the way. And really, this single control we're looking to get implemented is probably one of the most key ones, because it's literally the module that makes the payment to the so.
I'm curious, the trail system, is there something in that would, I mean, permissions wise, or is this paper sign off? Is there
It's-
something that could be set up to reject a sign off if it was the same person that authorized payment?
The trail system is a state system, so we don't have a ton of
Okay.
latitude to adjust the controls, but the control we're recommending is that the trail's payroll be run preliminarily, and then that somebody review that payroll and make sure the rates and the payees look reasonable before it's actually finalized. And so it likely would be a manual sign off, or at least some sort of email trail saying, here was the draft payroll and I've reviewed it and I approve of it. So
Okay, thank you.
So, and I think human services might get a break next year, and county finance is going to get the focus for single audit. So we will have to follow up on our findings, so we won't be able to not bother them at all, but they will likely not be the people being audited next year based on what we're seeing for federal funding. As far as the overall audit process, we're going to do our viewpoints document in the July meeting, but a lot of what I communicated to you today is there. It's just my formal communication to you as auditors that your management team was cooperative. They're going to provide us with a representation letter. We implemented new accounting standards and so on. As far as best practice recommendations, we have a handful of them that we're going to talk through with management, but nothing. The big thing I wanted to talk through was just really doing the getting that control in place over the trails payroll system. So any questions or anything that you would like some additional detail on? I do want to stress that your management team puts together the financial statements and we audit them. And so Michelle, Jim, the entire team there, Eileen, everybody who works in that department, including Sam, they work on putting that together. And so they should be applauded. They were very professional throughout the audit process. It was unfortunately, the audit year-end process happened right in the middle of kind of the height of the pandemic chaos, as far as people not sure what was going on. And so it's a testament to your team to being prepared and ready, and us staying on a pretty much original time period. So I want to say thank you to them, and they're always great to work with, as they has always historically have been. So. Okay, I think that's it that I had, unless there's some additional detailed questions that we needed to go through.
Well, I'm good. Grant, Rick, you okay?
Yeah, I'm fine. Summing it all up, it sounds like we had a good, clean audit, except for this one little item.
Correct.
I'm good.
Alrighty. I would pass our thanks on as well. I know we kind of built a good team internally, but was glad that we made our switch a couple of years ago. So you were familiar with us in the county before COVID hit. This would have been a very messy first year.
Yeah, it would have been very hard to get through, for sure.
Yes. So I just appreciate the efforts, because it was much more in the background than the last, many years, just because you weren't present in the building as much. So it was good to see the results. Thank you.
Thank you.
And I just want to echo what Matt had to say, as well as Chris, and say thank you to Michelle. She's hiding out. She's not got her video shared here, but Michelle is a huge asset for the county, and she has a really solid handle on all of this. And I can't even tell you how much I appreciate her and the team that she's put together, and all of the hard work that they've done, and her in particular. So. And thank you guys all for being such a great partner. Ruben Brown and I go way back, and it's a blessing to have you guys on board.
Thank you.
This is Rosie. I just want to say thanks to Michelle. We had a lot of last minute requests that just due to the environment that we're in, that she was on right away. So yeah, thanks, Michelle.
Yeah, can see her in the background there. So
Thank you very much to
Good.
everyone. It was a very excellent year, all things considered. So I appreciate your patience too with just the environment we've been dealing with of being in and out of the office. And you are our number one priority when we are in the audit, but we have definitely had some challenges this year with new tasks and analysis to have to do. So I really appreciate that.
Okay, well, Sam or Eileen, I guess, does that end this study session for our part of it? And I don't know if you all are staying on for your part.
No, we're done. Thanks, guys, so much for everything that you've done for us, and we'll see you in July.
Perfect. Thank you.
So, yeah, so just saying that I'll follow up with some information about our July BOCC meeting where you guys, you know, what the logistics of that will look like, whether it'll be virtual and you'll just join us that way, or who knows. We'll figure it out.
We'll wait and see. I saw the governor revise some stuff yesterday as far as like overnight camps are now allowed and some limited outside sort of activities can happen. So who knows, a couple weeks can change a lot of stuff by then. So
Great. Bring your sleeping bag.
yeah, sounds good. Thank you.
Great. Thanks,
So,
everybody. Oh, sorry. Go ahead.
no, that's okay. I'm just going to stop the YouTube live. Thanks, everybody.
Thanks. Take care.
Thank you.